Let's return our focus to the global ambitions of the UK Prime Minister, Theresa May, must commission and publish a thorough assessment of the consequences of Britain walking away from the EU without a deal.
That is according to the House of Commons Brexit Committee, which says that May's assertion that no deal is better than a bad deal is unsubstantiated, and failure to reach an agreement would damage both the UK and the EU. Let's talk about what's at stake for Europe then. Ursula Marchioni is Head of Portfolio Analysis Solutions at BlackRock, still with us. And we were talking a little bit about your strategy around EMEA and what you're seeing in the flows into EMEA. I mean, this, how much of a risk is this? What is this? Can you quantify this risk in terms of the European growth story? How much is it threatened by the Brexit conversation?
So broadly speaking, I think Europe is a good story. Certainly political uncertainty is there and will remain there for a few more months. But if I look at growth in earnings, for example, it's a very solid story. The reflationary trade is coming through. It is synchronized. So we've made significant progresses vis-à-vis Q4 last year. And flows are following. So if I look at globally what investors are doing across active and passive strategies, Europe is coming back in vogue. We have seen a significant rebound, and yet we're not there. So the upside that we see is significant. Just to give you a couple of stats, in 2016 we saw outflows from the global industry for $34 billion. We've seen 9 coming back this quarter. And again, if I look at PMIs, earning growth, and in general the underlying fundamentals, we believe there's more space to go.
And that's reflected, to be fair, I'm not trying to put your competition up in front of you, but this is Bank of America, Merrill Lynch. You can always say our ETF flows are bigger than theirs, whatever you want. But, I mean, this really sort of solidifies your point. Nearly $2 billion came in last week, the biggest inflow of money for over a year. But what I like about your detail is that you differentiate very clearly between the size and scale of where the flow is going to, small caps versus large caps, in terms of the European market. So differentiate that for us.
Sure. So I would say that, as you tend to see when investors go back to a market that they've underowned for a long period of time, they tend to go back to the large cap space. So they come back to the classic one. And yet, at global level, including in Europe, we've seen investors look into diversification in terms of style or factors. So value, for example, cyclicals have been, as you know, a good story for the last quarter last year. They've taken a breather in this quarter, yet we believe that has further legs to go. So value, cyclicals in Europe to continue to be very high in investors' mind, and we believe we're going to continue to see demand for those
kinds of companies. Now, as income remains a focus, you've seen some rotation in the types of strategies that investors are pursuing to try and get income. So where are they going to for that? Is it still the oil companies and the like that, income and the dividend is sacrosanct?
So dividend growers, dividend yield strategies continue to be very popular in the fixed income space. If we move there, obviously investors are now at the very end of the risk spectrum. Everybody is overweight. High yield, emerging market debt, the search for yield has pushed everybody, depending on their regulatory framework, to the very maximum. So I believe there's a big fundamental questions in terms of what's going to happen this year to those exposures. High yield, we've started to see some nervousness around the exposures. So investment grade has gained attention from investors from outflows from high yield. So that's definitely a trend. Emerging markets, broadly speaking, will continue to remain interesting in the mid-term. Obviously, there's a bit of volatility. You need to be able to stomach FX risk. We've seen that with South Africa in the last few days. But broadly speaking, the search for yield is due to continue. Investment grade and emerging market debt will remain in the picture.